Welcome to Coffee and Crypto with Lee and Jimmie. I am Lee Reiners, joined as always by Jimmie Lenz. Jimmie, I know you were at the world premiere of the Melania documentary last night. How was it?
Well, I'm gonna have to disappoint you, Lee. I did not get my invite.
Oh, you weren't at the Trump Kennedy Center?
I did not get my invite to that. I was listening to reviews of that on my way. I was driving a lot yesterday. I was listening to reviews of that. Documentary quotes.
How much would someone have to pay you to watch that?
I don't know.
It would be like your hourly rate, like your consulting rate. Probably your consulting rate.
Which is what they paid for it, $40 million.
Yeah.
I mean, that's some big bucks for a documentary.
What a grift.
I cannot. Yeah, you could not make this stuff up. I mean, if 10 years ago, if we were to be talking and somebody brought this up, no, that could never happen. And yet.
Okay, well, I just wanted to start with a little lighthearted note there.
Well, that's you know what else is lighthearted? I mean, it's cold outside here, but it is hot. It is hot inside at Digital Assets at Duke. I was thinking about this when we first came up with this idea 5 years ago. Mm-hmm. We said we're going to start a conference and we're going to invite people from the industry that we know and regulators that we know, and it was all about just kind of facilitating discussions. It was never about big presentations, not about Lambos, models, or any of that kind of stuff. and by the way, folks, we don't have any of those. But it was
just to be clear, models are welcome if they want to attend.
Models are welcome. Yeah, we can go off so many tangents.
We don't have like a model rate. There's not like a model. They have to pay the full registration fee.
They have to pay full registration. But they can show up. That's kind of like the Kenny Chesney song, won't go there. We came from the very beginning and said we're going to facilitate conversations, we're going to facilitate discussions that you can't do other places, that conversations that are going to be off the record. And here we are 5 years from when we first started talking about it. We have phenomenal people come into the conference. We have people from the regulatory sphere. We have people from all over the world, by the way, regulatory sphere. We have people from industry. I mean, if you think of a company involved in digital assets, they're at Digital Assets at Duke. I can't believe how many people said, "Oh yeah, I want to go home and change clothes, between Davos and Digital Assets at Duke." That's how we're being talked about, which is, phenomenal. Awesome. This is everything we could have thought it was going to be.
Yeah, the timing is extraordinary, and literally every agenda item we're going to cover on the podcast today, Jimmie, we will have the people involved at the conference, right?
Yeah.
And so the biggest stories in crypto right now, be it the market structure debate, SEC tokenization guidelines, Tether's new stablecoin, Fidelity's new stablecoin. We are going to have the people who are doing these things and involved in these negotiations in the room, on stage, accessible, taking audience questions, there's no soft questions either, right? I mean,
we're not playing softballs here. We're not lobbing anything in.
This is not, the whole premise of the conference was that this was not a crypto love fest. Now, look, I mean, the reality is that most people attending a digital asset conference are going to be supportive of the technology. That's fine. That's expected. But again, this is not salesmanship. So, we like, if you're on stage, like, people come, knowing that they're going to have to answer some fair but tough questions. And so I'm really looking forward to it. It kicks off Wednesday night at a reception at Cameron Indoor Stadium. Folks, I mean, this is the first time in this will be our fourth year. We've never actually had to cut off registration. We are on the precipice. I'm not just saying this, like this is like an online sale.
Do not.
This is legitimate.
Because you're going to be disappointed.
This is legitimate. I would suspect today or tomorrow we're going to have to turn off registrations because there is a capacity limit in the room that we're in. So if you want to come, you need to sign up as soon as possible. So I'm really looking forward to it, Jimmie. Let's just dive in because there's a ton to cover.
Let's do it. There is a lot going on. I think the first
story, look, digital assets, as the Fed goes, digital assets goes, right? Everything goes, right? And so I think we have to start with the big news overnight.
Today's nominee, Kevin Warsh,
President Trump, is nominating Kevin Warsh to be the new chairman of the Board of Governors of the Federal Reserve System. Now, he was obviously one of the four finalists, a
Yeah.
name that had been floated for quite a while. He's got a lot of track record in central banking. He used to be a governor. He was actually a governor at the board during the global financial crisis and
And under
Bernanke.
two different administrations.
Yeah, for sure. I mean, he's a Republican, obviously, and played a crucial role in the Fed's crisis policy response. What's interesting, Jimmie, is he has been known as a hawk, in
Yeah.
monetary policy terms, right? There's hawks and there's doves, and hawks generally, are more concerned about inflation and want rates higher, and doves are more concerned about the other side of the Fed's dual mandate, unemployment, and are willing to keep rates lower. I'm simplifying but I think
Just a
that's
little
generally
bit.
just a little bit, but in the context of moving things along.
So if you're thinking about a PhD in economics, you just got it. That's it.
You just got it, folks. There we go. I mean, come on. Let's face it. They're just throwing darts at the wall anyway.
Yeah.
So it's right, and obviously we know that Trump wants low rates. Like that's all he talks about.
Yeah.
He's clearly gotten assurances. Now, Warsh has done a lot of writing and speaking and trying to position himself and sort of frame his candidacy, I guess, because this wasn't his. I mean, he ran a campaign. Like, let's be honest. Like, he ran a campaign to get this job, and he had allies out there blocking and tackling for him, and he won. Congrats, you won the race, buddy. Be careful what you wish for, though.
But yeah.
And so the market reaction, right? We always have to look to markets because markets provide real-time signals, real-time reactions. That's the beauty of markets. The markets still view him as a hawk.
Yeah.
Right?
Yeah.
The market, despite everything he said recently, the markets still view him as a hawk. And crypto views him as a hawk because you're seeing Bitcoin down overnight.
We're seeing Bitcoin down. We're seeing gold down. We're seeing silver down. We're seeing the dollar firm up.
Yeah. Risk assets are down. Obviously, loose monetary policy, lower rates are good for risk assets. So Bitcoin, like you said, gold down, dollar up on anticipation of higher rates. So, the market does not believe that he has changed his stripes here. So it'll be clearly interesting to see kind of what he does, assuming he gets confirmed. And there's no, that's no guarantee. I think he will.
There's no guarantee he'll get confirmed. But
I think he
will because I think he's even though he's a Republican, I think he's middle of the road enough.
He's got the right credentials, right? He's not like a RF.
I mean, he has credentials. The right.
Well, you question everyone's
for this
credentials.
job.
You question everyone's credentials,
probably, but I mean, me.
Look,
I'm not.
He's not a Kristi Noem, RFK Jr. type, right? Like
no. He is.
Like
he's been
around.
Qualified
for the job.
Yeah,
he's qualified for the job.
He great, academic credentials, Stanford and Harvard and those kinds of places. He has worked a little bit in the industry, worked for a few years at Morgan Stanley, I think. And
Stanley Druckenmiller more recently.
Pardon?
He's worked for Stanley Druckenmiller more recently.
Yeah, worked for Stanley Druckenmiller. He has, he's a lawyer by training. He went to Harvard Law. And he's done a lot of government work. He's worked, had a number of positions. You mentioned he was in the Fed previously. I'm fairly young in the big scheme of things. He's, I think, mid 50s. He's, for this role, he's fairly young. I would have liked to have, I always want to see people with a little bit more industry experience. But this is a role that's probably more theoretical, so in realm. And he has written, as you said, a lot. He's done a lot of research. I was going to later look through some more of his published stuff, but he has been out there, as you said. He's been campaigning for this, and so it remains to be seen, what happens. But if he does get the nod and gets this role, I mean, Trump will have what he wanted, an opportunity to, replace Powell and to put his own guy in there. We'll see. I'm a little bit surprised that somebody like this got the nod, given his stance and given the fact that you haven't heard him talk about lower rates. You haven't heard him. He certainly talks about rates a lot, but I don't know. We'll see. Who knows what lurks.
Yeah, I mean, unprecedented time in central banking here. Fed independence is literally in front of the Supreme Court right now.
Fed independence is, and the other
So
thing that I don't know if you saw, this is totally off topic, but I don't know if you saw, the notion of interest being paid on reserves has come up again. People forget that this is one of the biggest Fed balance sheet issues is they pay banks on the reserve assets, and it's a lot. I mean, this isn't like a drop in the bucket. We're talking hundreds of billions. I mean, it's a substantial amount. And but it's back up. I mean, it was a topic in front of the Senate Banking Committee. Tim Scott said, we need to move slowly on this, but it'll be really interesting because since the financial crisis, which he had played a part in, since the financial crisis, we've had a lot of tacit bank bailouts. We have interest being paid on this. We had the 5% on PPP loans. We've had the guarantee of Treasury securities. I mean, it's been a lot.
Well, we had after SVB, we had the Bank Term Funding Program in which the Fed lent against Treasury securities
on the dollar
at par.
Yeah, basically guaranteed the value 100 cents on the dollar for Treasuries. No matter
the value
what
of the loan was greater than the value of the collateral.
Oh, absolutely.
I mean, that was a backdoor bailout for sure. God, we could go on forever.
We could go on and on and on. But this is one. Given his stance, this is one that I could see the interest on deposits. I could see this one coming to light, and it's huge.
Well, Warsh has clearly articulated his view that the Fed is playing too big of a role in the financial system.
Yeah.
So he's talked about shrinking the Fed's balance sheet, right? And of course, that is most likely going to put upward pressure on rates, which again is a bit of a surprise. Not that Trump has sort of any kind of like consistency here. I mean, he's like talking about affordability at the same time he's pressuring the Fed to lower rates, which would lead to inflation. Which guess what that does to affordability. But anyway, and the reason that the Fed pays interest on reserves is because we're in this ample reserve regime, right? I mean, historically, the way monetary policy worked was through the Fed funds rate, right? Banks would buy and sell reserves from one another in order to meet their reserve ratio, and that the rate at which they would lend reserves to one another, and the rate at which they do so is the Fed funds rate, right? That was the targeted rate. Well, after the financial crisis, when the Fed just printed insane amounts of money.
Just injected money,
injected money, and for good reason. I don't think anyone's saying they shouldn't have done that for good reason. Then, there was no need. We're in an ample reserve regime, and so the Fed funds rate sort of became not useful as a monetary policy instrument. And so the way then, if you want to set a floor on interest rates, is to pay banks reserves, right? Theoretically, there should be no loan in the real economy that would be below the rate at which banks can get from lending to the federal government, right? From lending to the Federal Reserve. So it's really been a tool to control for monetary policy. But if he wants to, shrink the Fed's balance sheet, then and it's big. It's like 6 trillion. I mean, it's down a little bit, but it's still significant. So we got a ways to go here. I think you can entertain the idea of stopping those reserve payments, but it's all dependent on the market reaction. Will the market convulse? I mean, the market has gotten used to this drug, frankly.
They have gotten, I was thinking the same thing. If you look at what's happening now in banking, and we're talking about the changes in banking that are going on with crypto and things like that, it will be I think it will definitely some of the bigger banks. I mean, this could really hurt. I think smaller banks, not so much, but bigger banks, this could really hurt.
Yeah, I mean, I don't think smaller banks are parking too much at the Fed, but certainly. Okay, well, let's move on. Jimmie, to the SEC, our friends at the SEC, right? So tokenization. Guess what, folks? We're going to have 3 separate tokenization talks panels at Digital Assets at Duke, and we're really going to be covering the things that were laid out in a staff statement, right, on tokenized securities issued just a few days ago.
I was going to say, it just came out.
It just came out January 28th. It was issued by the Division of Corporate Finance, the Division of Investment Management, and the Division of Trading Markets. And what it does is it provides clarity on how the securities laws apply or don't apply to different models of tokenization. And so we're going to be talking about these different models at the conference, because people talk about tokenization if it's just one thing. It's not just one thing, folks, right? And so, we're going to be having a session on tokenization in the context of mirror tokens, right? But then also with Promethean, we're going to talk about digitally native tokens.
Native token,
And
yeah.
and the staff statement, the statement on tokenized securities really kind of lays out those differences, and I think a good way. I mean, it's not too long. We'll post it in the show notes. But I think if folks want to get a quick and dirty explanation of the different models of tokenization, this is a pretty good place to start. So it's a good explainer.
I think this is a really good place to start. And I think for folks who are, they're reading, there's so much stuff out there. I mean, you can read the SEC, minutes, and you can see, what they're saying. And we're going to talk, I know, about the interview, the SEC-CFTC interview. The world has ended, as we know it. But, I think it is really important. And we have, a lot of the people coming to the conference are not what you would expect. I mean, we have a lot of banks coming, credit unions coming, community banks coming. A lot of people are there to hear, hey, what is up with this? The tokenized assets, the native tokens, stable coins. There are so many things, I think, going on in that space, in particular the tokenized space. And, now we're starting to see regulators come out and start to give a little bit of guidance, just a little bit, but they're starting to give some guidance there. I think hearing from the people who are actually building these things is going to be not only informative for people, but I think it's going to set a direction, because we've already seen this story a couple of times with digital assets where things come out and build stuff, and then the regulators will go back and say, yeah, that looks good, or yeah, you should do it this way. But I haven't seen anything where they said stop. And so we'll see what happens. But I mean, we've been pretty good about guessing what's going to happen in the near future at the conference. I think the fact that this is at the beginning of the year, people are just coming off of Davos, people are setting tones for the year. It's I'm really excited to hear. In particular, I mean, we have 3 panels that deal directly with tokenization.
Yeah. Plus, we have Commissioner Ueda coming.
And the commissioner, actually, and we have an ex-CFTC commissioner coming.
Yeah.
So we have a lot of folks there that are definitely in the conversation.
A lot of folks. We have 2 ex-CFTC commissioners, actually.
Well, we do. That's right.
Yeah. So here's the TLDR for folks. The SEC says, and look, Commissioner Peirce, to her credit, said this a while ago, tokenized securities are still securities under the federal securities laws. Full stop. Right. But then, there's some differences, right? And the specific aspects of the securities laws will apply differently depending on, the type of tokenization model you're pursuing. So they say there's essentially 2, SEC, says, 2 categories here. Number 1, securities tokenized by or on behalf of the issuers of such securities, right? So this is the issuer is issuing directly on the blockchain, basically, or DLT.
I would think a native token. Basically.
Yeah, think of a native token, okay? Now, there can still be an off-chain kind of, they talk about a master security holder file, right? And so in essence, with the...
Which is very DTC kind of centric.
Yeah, exactly. So that master security holder file can itself be a DLT, or it can sort of be in parallel with DLT. That, of course, is clearly a security. Then you have the second model, which is the predominant model as of now for actual tokenization projects in the wild.
Yeah.
And that is securities tokenized by third parties unaffiliated with the issuers.
And a lot of times those are actually claims on something. They're not the actual underlying asset.
Exactly. And so the SEC says, these are securities entitlements. Basically, right? So within that second model, the third party sponsored, then there's sort of 2 subcategories that the SEC lays out. First is custodial tokenized securities. Again, that's kind of what is predominant right now. And we're going to hear actually from Robinhood's Johan Krabat, because this was the big news over the summer when Robinhood had that big launch in France, when they were going to, in the EU at least, going to offer tokenized stock, including tokenized private company stock. But what they were doing is they were going out as a company, buying the underlying securities, holding them in custody, right, and then issuing a token that represented
a claim on those
represented securities. Represented a security entitlement on the underlying. but the token itself did not confer any voting rights, right? And the issuer is not
Right.
involved in these, right? And OpenAI made that quite clear.
And we should stop and let people know that, when we're talking about like claims versus direct ownership of a security, that sounds like we're just splitting hairs, but we're not. And they're treated very, very differently, in particular on company balance sheets and bank balance sheets. The difference between owning an asset and owning a claim on an asset are treated like an asset and a liability. And so these are, while it sounds like this is kind of a small thing and just a detail that lawyers care about, it's absolutely not. This is treated very, very differently, and not just by the SEC and CFTC. It's treated very differently by regulators, bank regulators around the world, and the way this is accounted for. And I know these are like boring things, but these are the things that come back and bite you in the ass in a big way.
Oh yeah, I mean the reality is that most securities are held in street name, right? I mean, if you have a brokerage account, right, like you have a security entitlement.
Yeah.
You do not own directly. Now, thankfully the plumbing works well enough, so it doesn't really matter to most people, right? But it can matter.
DTCC does a really good job.
They're pretty good. And of course, we're not just saying that because they're a sponsor of the conference here. And then finally, Jimmie, we don't need to go too far into the weeds here, but the second model of the third-party tokenization is the synthetic tokenized securities, right? In which case, that very well could be a security-based swap. So if it's a token that is designed to, sort of pay you the change in an underlying equity, right, from a price standpoint or whatever it may be, right, that's a security-based swap. So so I think this was helpful. I don't think anything earth-shattering here, but it's still helpful, I think, for the SEC to put this out there so folks can kind of build knowing full well what the broad securities laws will be that get applied to the project.
I think you're right. There's nothing earth-shattering here, but it's nice to see it in writing. It's nice that people don't have to infer certain things. I think it's good to see that they're working on this the way they are too. This is staying front and center, and people may say, "Oh, well, it's just the Trump administration," but it's really not. It's the time and place. It really doesn't matter who's here. I think these kinds of topics, given the amount of innovation and the amount of investment going into the industry and industry assets, it's incumbent upon them to do this at this point in time. And I fully expect that we're going to see this year a regular stream of these kinds of things coming out of the SEC. Probably CFTC too.
And we've seen some of them already. I think those were more on and frankly, the other ones I disagreed with entirely, right? So they put out a staff statement on meme coins. They put out a staff statement on stable coins. This one I actually agree with. I think it's spot on. I think it's pretty clear. I thought, this makes sense to me. But I mean, this is something that Chair Atkins has talked about, which is, providing clear rules of the road so that innovators can innovate. And so, I think they got this one right.
I think that's the way he actually introduced it, was to, as a clarifying, message. I agree with you. I mean, I like seeing those kinds of things. I like seeing the regulators out in front of these things. The other thing that I'm really interested to see and to hear about, we've heard a lot about things at the federal level. State level, we haven't heard quite as much lately. There are a couple of states that are known for certain things, but now with these new, and I know we're going to talk about it in a minute, the trust bank charters. There's like a lot of trust bank charters being applied for, a lot of them being granted. Some of the states where they're being done is interesting. I don't know if you've looked at those, but it's interesting where these are actually being done.
Well, we have a banks and crypto panel at the conference, and we are going to be talking directly on this issue. So we have the North Carolina Commissioner of Banks, the wonderful Katie Boskin, right? And we have Rodney Hood, former acting comptroller. So, and we have a gentleman from Anchorage, Joe Medioli, who, Anchorage was the first crypto firm to get a national trust bank charter at the tail end of the first Trump administration. So we're going to dive into all these issues at the conference. And on the tokenization piece, again, multiple panels. We're going to have the guy leading tokenization and Robinhood speaking, Commissioner Ueda at the SEC speaking, and I'm sure this will come up. So another issue that's going to sure to come up, Jimmie, is something that happened yesterday, which was a joint regulatory harmonization roundtable featuring SEC Chairman Paul Atkins and CFTC Chairman Michael Seelig. Now, Seelig was recently just confirmed. And I think this was his first public remarks since being confirmed. Now, for those who don't remember, Mike Seelig previously was a counselor to Chair Atkins. He was actually lead counsel on the SEC's crypto task force. So, he, prior to being, taking over at the CFTC, he worked for Chair Atkins. And basically what I inferred from yesterday's announcement is that he still works for Chair Atkins, apparently. So
I thought this was like a sign of the apocalypse with both of them doing if you took the names out of the equation, the chairs, the two chairs sitting down, doing an interview together like this. I mean, who would have thought 5 years ago this would have ever happened? Obviously they know each other, they've worked together in the past. I mean, honestly, I like this, and I'm not a cheerleader for most regulators. I like the fact that they could actually work together. They have a working relationship. I think, in particular, for CFTC and SEC, right? They're so inextricably linked. Having that adversarial relationship that they always have in the past. I mean, it was difficult. It'll be interesting to see how this comes to pass. As you said, this is Seelig is so new in the role. We really don't know what's going to happen there. But I was very surprised they did a co-interview like this.
Yeah, I mean, wow, a lot to unpack here. So there wasn't a lot in terms of like concrete news and policy changes. It was more of an announcement that we tend to work together to do certain things, and chief among those is token taxonomy, basically, right? Developing in coordination clear guidelines for market participants to understand when a token is a security subject to SEC registration requirements or an exemption thereof, and when a token is a commodity, right? And of course, we saw this tension, as you alluded to, in prior administrations, I think most notably around Ether, where, Chair Gensler for a long time, wouldn't concede that Ether was a commodity, and at the same time you had
to see security.
I mean, he was kind of hinting that it might be a security, especially after it moved to proof of stake. And you had the CFTC at the same time allowing Ether futures to come to market under the Commodity Exchange Act. And so I think that was a situation where it's like, okay, well, like these guys aren't on the same page here. These agencies aren't on the same page. So, that was kind of the first, the big announcements that they're going to work together on that. The CFTC, the SEC has Project Crypto, right? We've talked about Project Crypto. The CFTC has, under former acting chair FAM, was Crypto Sprint. Now they're rebranding Crypto Sprint as Project Crypto. I don't know if that matters at all, whatever, but it's, okay. So they both have Project Crypto going on. And they're going to work on a few other things together, and we'll see what comes of that. Seelig also talked about a couple things that were sort of outside directly the SEC's remit, which is he wants to do a rulemaking on prediction markets. We talked about that. That is, go with God on that one, buddy. I don't know how you're going to navigate.
I think that genie's out of the bottle. I mean, I don't know how you put that one back in.
I mean, it's politically fraught right now, and I don't, I don't know kind of what type of political capital he has to do anything in that space. So, I guess kind of a big deal, but we'll wait and see, right? Okay, Jimmie, let's move on. We're gonna stick with DC here. We do have some movement on crypto legislation on a market structure bill. So this week, the Senate Ag Committee voted out of committee its version of the crypto market structure bill. Now, this was, I guess, less contentious.
It did not get bipartisan support.
It was not bipartisan.
It was not bipartisan support.
This was a completely partisan party line vote. So it passed out of committee 12 to 11. No Democrats supported it. Although some Democrats afterwards, did give statements saying, "Hey, we want to continue to work together, to try to get to some compromises here." So, it wasn't
I was surprised.
all acrimony.
Were you surprised by that?
Not at all. Not at all.
I was because prior to this, it had pretty good bipartisan support, and it seemed like things when they hit a that roadblock, everything kind of fell apart. I was surprised that we had no Democrats crossover. I think that they're I'm not going to forecast what the midterm elections are like, but they're not doing themselves. I mean, Democrats aren't doing themselves any favors by doing this kind of thing.
Don't go there. No one gives a shit about this.
I don't think they
no
are.
one gives a shit.
I mean,
you don't think? They might. Hey, look, I'm not.
You don't think it'll make a big difference?
No.
I think it'll make a big difference.
No, I think U.S. citizens getting murdered by federal agents in Minneapolis will make a bigger difference than whether or not.
I'm not trying to downplay that, but I think when we're looking at this issue, you would want to at least be seen as someone who wants to work on it. I think it's going to be bigger.
We're going to cover this in the conference. The crypto industry has ginned up all these industry funded polls trying to portray millions of crypto one issue voters. There's just no data to support that. No independent data to support that. I think furthermore, the big look. Let's be honest about why this was a partisan vote. Mainly because of Donald Trump's rampant conflicts of interest in the crypto space.
Yeah.
And I think, you are right in the sense that there were, and probably still are, many Democrats who want to or were amenable to voting for this bill.
Yeah.
Right. But then, the president's greed, frankly, got in the way because now, in their mind, at least, if they vote to advance these bills, it will be perceived as them voting to further Donald Trump's financial interests in regards to crypto. And, now their constituents are going to let them, because look, the New York Times has beat reporters whose full job is to covering Trump's crypto conflicts. That's how bad the situation is. So this stuff is, people are aware, right? And Democrats, the rank and file, are pissed about this. And they're going to hear it. The senators, if they vote for these crypto bills and they don't have anything in there about Trump's conflict, addressing conflicts of interest, they're going to hear it from their constituents in a way that they wouldn't have otherwise, right? So Trump hasn't done the crypto industry any favors here, and I don't want to get too political, but look, this is a political process we're talking about here.
It is a very political process, as we saw.
You would think, and this would be the one issue where, the bill. So the Ag Committee, of course, has jurisdiction over the CFTC, right? So that's why there's two separate tracks.
That probably confuses a lot of people. Why it's the Ag Committee?
Back to the roundtable, the harmonization. Just merge them. I wrote a Wall Street Journal op-ed saying merge them. At the start of the Trump administration, I said Doge. Go low hanging fruit. Doge, merge them. Look, they're kind of doing like a de facto merger. With Atkins working hand in hand with CELIC, but
CFTC,
just Congress should merge them. But the issue is that these committees don't want to give up jurisdiction.
They're not going to give up power.
A lucrative source of campaign contributions.
Yep.
Lucrative. All right. Let's move on then, Jimmie, to another big announcement, product launch. We should get, if we actually had money for this thing. Anyone want to sponsor this podcast, by the way? Then we could get some, audio effects.
Cool if we had sponsors. People don't realize that, I think, aside here, all of this is me and you. What the conference, the podcast.
I think people listening, and we don't have music or anything like that. They probably recognize that it's just us kind of winging it a little bit here.
This is all on Lee and I. The conference is self-funded. That's why we're this is self-funded. I mean, it's we don't have.
Well, the conference is funded by sponsors.
It's funded by sponsors, but the conference itself is self-funded.
Yes.
There are no outside funds coming in from any place.
It's not a
despite the name
enterprise.
of the conference. And so it is.
So anyway, I was saying it'd be nice if we could have a little sound effect whenever we talk about a product launch.
It would be. It would be.
So the product launch,
maybe a rocket taking off.
There you go, to the moon. Tether. Right.
Tether, USAT.
So USAT, a new dollar-backed stable coin. Okay. Designed to be fully compliant with the Genius Act, a built-in America. We like built-in America, don't we, Jimmie?
Built-in America.
A built-in America stable coin. Guess what, folks? Again, Bo Hines, the CEO of USAT, the new stable coin, is going to be interviewed live on stage by the Crypto in America podcast, America's second most popular crypto-related podcast.
Yep.
And it's going to be awesome. We're going to hear directly from the guy doing this, building this. Yeah, Jimmie, I mean, I don't know. This is a big deal.
This is a
Tether is, of
really big
course,
deal.
the biggest
I think,
stablecoin, US dollar Tether, USDT, that's the granddaddy of them all,
yeah.
as they say. And USAT is actually going to be issued by Anchorage Digital Bank. Okay.
Mm-hmm.
And guess what? We also have someone from Anchorage speaking
Anchorage,
at
I
the
was going to say,
conference.
Anchorage is also
We
going to
actually
be
have
at the
two. We have
conference.
two people. We have two people from Anchorage.
Yeah.
Our good friend Carlos, friend of the show, is going to be speaking on the security and investigations panel. But yeah, I mean, we'll see. I think we're going to have a stablecoin panel. We don't have anyone from Tether there on the stablecoin panel, but kind of one of the questions I have and you have is, where's all this heading? Every
Yeah.
single day, there's a stablecoin announcement.
There's a new stablecoin announcement. I mean, Fidelity announced a stablecoin, right?
Yeah,
They just got one of the new trust charters,
they did. They
and we'll
did.
have people from Fidelity there. They're also one of
Yeah.
our sponsors. So it will be. Yeah, I mean, you're right. The one thing that I mean, I don't think we can have a million different stablecoins. It's just that's probably not tenable. There are a couple of things, though, I've kind of thrown out ideas to people and said, come back to me with something on this. I would love to see a way to use stablecoins to append and people are going to hate this, credit card market. 3.5% fees. I am not paying 3.5. I told Kim today, my wife, I'm going to start writing checks or doing e-checks or Venmo. I'm not going to use my credit card. I use it as little as possible. I am not going to pay those 3.5% fees.
Well, you
It's
don't
just
pay them. The merchant
insane.
pays them. The merchant
Pardon?
pays them. The merchant pays
No,
them.
does the merchant ever pay? It's like taxes. Does who really pays taxes? The consumer. Tariffs. Who really pays?
Yeah, but look,
It's
most merchants aren't price discriminating based on payment method. Some are, right? Like
well,
contractors are
a
the
lot
big
of them
one.
add 3%. I mean, I
So,
have merchants.
no, I get you.
Yeah.
I'm 100% with you. And look, when they do, I absolutely pay by check.
Yeah.
A lot of like kind of folks in the trades, if you have any work done, landscaping or whatever like that, they'll send you a bill and it'll say, pay by check for whatever discount,
Yeah.
or 3% added. But by and large, I mean, if you go to a restaurant, if you go to a coffee shop, they're not doing that level of price. They're not doing price discrimination like that. But I am with you. If I have to pay more, if it's communicated to me that I have to pay more if I use a credit card, then I don't use the credit card.
I don't use. We had something this morning. We had a big bill come up, and Kim said, "Oh, it's 3.5% extra if we use a credit card." It's like, screw that. We're not using a credit card then. I just won't do it. And I think that's those kinds of fees. I mean, added on to everything else. So I'm going to go off on a little bit of a tangent here.
Oh, here we go. The runway's yours.
Yeah. I look around and I look at the cost of things. The cost of everything is going up, and there have been efforts to try to hold things in, drug prices, and the Medicare thing that just came out. They only got a raise of 1% instead of 4 or 5%. But by and large, you go to the grocery store, you go to buy a new car, unbelievable. New car, how much it costs, right? I mean, both Kim and I, our cars are over 100,000 miles, and it's like I'm not going to buy a new car. For anything, you're paying a fortune these days.
Yeah.
I mean, I can't believe you're going onto car lots and they're advertising things at $75,000 and $80,000, and those aren't the top. Those aren't the top of the line cars.
No,
American cars. I'm not talking Mercedes. I'm not talking about Bentleys here, folks. I'm talking about GMC. You can drop 100 G's on a GMC right now, and it's not hard to do that.
Yeah, no, like a new Yukon. A new Yukon is $100 grand.
Oh, absolutely. A new Yukon. I mean, it is. You and I were talking, so I was looking at GMCs, but it's like this is insane. We cannot go on and and I see the numbers that are put out. I think everybody knows, take those with a grain of salt. But I mean, this is what digital assets were meant to do. They were meant to take fees out. They were meant to things. I think more. I mean, originally this is what if we go back to Satoshi Nakamoto, what was this? It was a peer-to-peer
payment
system. This would have been, it would have had less friction, it would have less cost. People need to start reading that. I'm probably gonna open with that at the conference. Like, you guys need to read this. This is not just another land grab for fees like the credit card companies are doing. And I'm just, it's just we've reached a point where inflation's gone wild. You're not seeing it reflected in the press. You're not seeing it reflected in government numbers. But you go to the grocery store, costs have gone up a lot. I mean,
you can't fool people.
You cannot fool people. I mean, it's
No.
unbelievable. The cost of things. I mean, I don't know. You have two little kids, so you probably don't go out to dinner a lot.
No,
regardless.
no.
But I mean, Kim and I don't go out near as much as we used to. I'm just not going to pay that. And maybe you can say, well, Jimmy's just cheap. Kim says that all the time, but it's the promise that we had with digital assets was that it would take out a lot of frictions, and frictions are always costs in terms of
well, it would take out intermediaries. It would take out intermediaries, and intermediaries impose costs, right? I mean, they're not, no one's intermediating things out of the goodness of their heart, right?
Right.
So they're extracting rents, which is what intermediaries do. Now, of course, the irony is that the people coming and speaking at the conference generally work at intermediaries. So
do.
that I
some of them do.
I think the Satoshi vision has that ship has sailed in pursuit of capitalism, baby. Right? So that's what we do. So ideology gets thrown.
I don't know.
Yeah. The vision, Satoshi's vision. Look, affordability is the buzzword right now.
Yeah.
Right? It's the word of 2026. We're going to be hearing it more and more heading into the midterms. I don't think anyone has a clear vision or a plan on what to do about it.
I don't think anybody has a vision.
And to the extent, maybe it's because there's nothing. I don't know.
It would be
but I'm with you
interesting
on the
if
new
we
car
could
piece.
resurrect.
Like, look, on my little rant now.
Yeah.
This is the new car situation. I totally agree with you, and this is why U.S. auto manufacturers, their goose is cooked if BYD is able to get into the U.S. market, man. Because China is building these kick-ass electric vehicles and is selling them for like $15,000. I mean, America, like Ford and GM, will never sell another car if these Chinese cars are able to make it into the U.S. market. And that was the big takeaway for me on the heels of Mark Carney's visit to China and the trade agreement that Canada inked with China. Because now they're going to allow like $50,000 a year, like 50,000 BYDs or Chinese EVs a year. Now that's small, but I think, man, once
Canada
those things
ain't that big though.
Canada ain't that big, and once they get in the hands of consumers and people, because from everything I've read about them, like people love these cars, and they are great cars, and they are nice. I mean, because in your mind you think of a $15,000 car as like a piece of junk, right? Now, obviously, it's subsidized by the Chinese government, right? But yeah, I think that the U.S. auto manufacturers are in a world of pain here if these Chinese EVs are able to access more markets. So, anyway, let's move on. So speaking of, I guess this is a little related to prices and affordability, because man, gold, what a tear gold has been on.
It has.
I've
told this story before, probably on the podcast about, gold, the analogy of gold. The price of gold, in the value of gold, the buying power of gold doesn't ever really change very much. It's the currencies that trade around it, right? And that's what we're seeing. So when people are like, oh, the gold's way up, it's like, folks, gold ain't way up. Your dollar's way down. That's what this is. I mean, I don't know what it's going to take for people to figure that out. It's like, things like gold, they don't change. They're buying the exchange, what you could buy for gold, 5 years ago for an ounce of gold. You buy that same thing today, folks. The dollar is just worth that much less.
Yeah. Can we finally put
a chart of cars, dollars, and gold?
Yeah, there you go.
I'm writing it down right now.
Go to Costco and buy some gold bars, and then head to the dealership, see what they say.
Yeah.
Okay, Jimmie. So can we finally put to bed this idea that Bitcoin is somehow digital gold? Can we declare the death of that narrative on this podcast right now?
I never bought into that whole thing, though.
I know you didn't, and kudos to you. Because look, Bitcoin has been slumping for months now, and gold has been on an absolute tear. So there is zero. I don't want to say zero. Maybe a negative correlation at this point between gold and Bitcoin. But the reason I brought up this story is because Bloomberg had a piece out this week on Tether's massive and growing hoard of gold, Jimmie. Okay, so Tether has around 140 tons of gold. Okay, worth approximately $24 billion, and they're storing this gold in these James Bond style vaults in the Swiss mountains, right? So I'm just imagining, guys in kind of like white, full white ski suits with, AK-47 standing out front, ski goggles on or something like that.
Very James Bondish of you.
Very James Bondish. That's right. And so look, they bought over 70 tons of gold over the past year. I mean, the timing for them is fantastic. And as we know, the U.S. dollar tether, part of the reserves is gold. Okay.
Yeah.
Now that is not, back to USAT and why they need to do USAT, because gold is not a qualified reserve asset under the Genius Act. Okay.
Yeah.
And there has been some critique because gold is volatile. I think we mentioned a few weeks ago or a few months ago, S&P 500, for instance, downgraded because they have a ratings framework for stable coins. They downgraded Tether's rating in part because of their holdings of gold. But nonetheless, they are amassing a ton of gold, and they're actually starting to get into trading gold too. So they have hired from HSBC 2 of their top gold traders. So, commodities trading, I know, is a niche. I know enough to be dangerous a little bit, I guess, but it is a niche market. It's an opaque market, and Tether wants to be a player, I guess, Jimmie. So they have, their reserves on their main stablecoin right now, according to their September 30th attestation from BDO, was 13 billion. Okay, so it's still a drop in the bucket compared to their 112 billion in treasuries, right? But it's growing. So Tether's a major player in the gold market.
Right. They are a major player. I think that it speaks to and when we were reading that, what I was thinking of is the kind of the old days, going back before the 1972. This idea of gold-backed currencies, and you have to draw the comparison, right? You have to draw that analogy to some extent. Are we returning in a tacit way to this past this fairly recent past, 50 years ago, 60 years ago, where we had if not in whole, in part, currencies that were backed by or tied to an underlying asset like gold.
Yeah. And Tether does have a gold-backed token. So they have XAUT, redeemable for physical bullion. Right now, around 2.7 billion in circulation. So again, quite small compared to their main US dollar Tether stablecoin. But it's quite possible that something like that could take off in this environment. Absolutely. Right. It wouldn't shock me if, a few months from now, the market cap and you saw other gold tokens, gold-backed tokens issued by, reputable players take off for sure. I mean, I could see BlackRock doing something like this. They haven't already, frankly. And of course we have, they do gold ETFs and whatnot. And those are quite popular. So fascinating story. All right, Jimmie, let's end on another kind of interesting story. One that we haven't really touched on yet. We're going to have a DeFi panel. So we have, Reed Timcio is going to moderate a great DeFi panel.
Yep.
And I think one of the things we're going to talk about are vaults. Okay.
Yes.
And we have not really talked a lot about vaults on this show, partially because I actually was not all that. I had heard about them. I hadn't really done much research into vaults, but they're becoming more popular, right, Jimmie? And especially as stablecoins have taken off, right? People want to put their money to work, right? If you have a stablecoin, you want to do something with it. You want to get yield for it. How do you do that? Well, vaults are one way to do that. So what are we talking about here? Here's the kind of the summary explanation, courtesy of Bloomberg. We'll put the article in the show notes. So vaults let users deposit crypto into shared pools that then deploy those funds into lending or trading strategies designed to generate returns. But these vaults are non-custodial, okay, meaning users never hand their assets to a third party. And the pool of funds sit in smart contracts that, the code is visible to all. And these smart contracts automatically deploy capital according to preset rules with key risk decisions visible on the blockchain. So
what do you think of those? I mean, both the kind of, I guess, the theory behind them and the actual application.
Well, it's one of those things where I just go, not for me.
Yeah, yeah,
That's kind of how I look at this. So, like a lot of things in crypto, there's the theory back to kind of Satoshi, right?
yeah,
There's the theory, then there's the application. So the theory makes sense, and you say, and I give you credit all the time because you say, look, folks, do your own research. There's never a substitute for do your own research, and I think that's absolutely the case with these vaults here.
yeah.
If you do not, I mean, smart contracts, we've seen time and time again there's flaws, right? I mean,
Flaws.
most code, even if it's produced by, the best coders, the most reputable tech companies in the world, right? There's generally flaws. And so, I don't know if I talked about this, but a good documentary that came out a few months ago is called Code is Law. And it's available on Amazon Prime. I don't think it's free. I think you have to pay or rent. But I encourage folks to watch it because it actually talks about some of the more high profile smart contract hacks in crypto history, including the original, the DAO, and the people
Yeah,
behind the DAO. And so they talk to the developers because the argument always in the wake of these hacks is like, well, they didn't do anything illegal. Code is law, folks. They just exploited the code. And
yeah,
the people who built these things are like, absolutely not. Like these people should be punished. Code is not law, which I can understand if like that's your baby and
yeah.
someone kind of exploits it like that. That'd be your attitude.
I mean,
You got to be careful. You got to be
yeah,
careful.
and you have to be really careful with
And
these
they
things.
reference a specific vault that was doing some off-chain type of activity that collapsed. So Stream Finance collapsed last year after roughly 93 million and user funds were lost. I mean, look, Jimmie, vaults in some ways are corrective
Mhm.
to the abuses we saw in 2021, 2020, 2021, 2022, right?
Right.
Where you saw these crypto, lend products or earn products or whatever the name they splash on them. And as you said at the time, and we said at the time, if it sounds too good to be true, folks, it
It is.
probably is. But look at Terra, right? The
Right.
Terra Anchor protocol with Terra, 19% yield. Celsius, right? BlockFi, Voyager, right? It was give us crypto, and we'll do something with the crypto,
Yeah.
and then you'll get above average
How
return
many
for it.
times did we say that? How many
And
times did we say, this can't be real? Nobody can tell me how this works. And
and
it's
the
not
issue
because we're not smart people.
no. And the things they were doing to generate that yield were quite risky and blew up when crypto prices tanked, right?
Yeah.
And I think the logic with vaults is like, well, look, as long as everything is transparent and people can see where the yield is coming from and the strategies involved, there's less risk and people can be sort of informed. So I understand that logic, but as you know, Jimmie, most people aren't doing that level of review. If they see something that's like, oh, 15%, that's great.
Yeah.
Let me pile in, and now you have these centralized platforms like Coinbase, for instance, partnering with some of these vaults and essentially passing user funds on into these vaults. And it doesn't sit on their balance sheet. The whole point of vaults, because they're non-custodial, it doesn't really sit on anyone's balance sheet. In theory, if you're an investor in a vault, you wouldn't become an unsecured creditor. So I don't know. I mean, I'm looking forward to hearing Reed and company talk about it at the conference.
Yeah,
It's
I mean,
just
Reed's
it's just
a
it ain't
really
for
good
me.
person to talk. I think to talk through something like this because he had a fund, still is I think a partner in the fund, a hedge fund that does a lot of investment, and so he looks into these things and he's used a lot of these things. I'm a little bit intrigued by the way these are set up. I think
Okay.
it's kind of a neat it's kind of a neat idea. With traditional assets, it would be harder to do this. Not impossible, because you would have to give full discretion, and I guess they have full discretion with these, but they don't actually hold the assets, which is different. And so this is it's. I mean, it could be kind of the next iteration of investing,
Yeah.
of a way to invest. So I'm really interested to see and to get his opinion. He, like I say, he's actually used these things, so he's one of the few people I know
Yeah.
who does this, and so it'd be fun to hear.
Absolutely, man. All right, Jimmie. Well, look, we went long today. I told you we're going to
Yeah,
go long because
I
there's
know.
just so much to talk about. And guess what, folks? Like we said, everything we talked about, we're going to be hearing directly from the folks involved at Digital Assets at Duke. So, we are several days away. Wednesday night reception. Register now if you haven't registered. If you listen to the show and you're coming to the conference, please, let us know. Looking forward to meeting folks.
Yeah, absolutely. They should let us know that if you're at the conference, let us know what you think about the podcast. We get a lot of
Yeah.
mail, but do let us know kind of what you think. We're always interested.
All right, Jimmie. Stay safe. Stay warm this weekend. We got some snow coming our way tomorrow.
Yep.
Right.
You do the same, Lee. Have a good weekend.
All right, brother. You too. Bye-bye. All right.